Mr. Abdul Zubar is the acting DG of the Securities and Exchange Commission. Let's quickly touch on the numbers that we had this week, the very first week of 2018. We'll start with the equities market, where the all-share index of the market came in positive for this week at 1.78%. That is sustaining the momentum that we saw towards the end of the year 2017, December last year. All-share index is gravitating towards the 39,000 psychological line, while the market capitalization is currently at 13.851 trillion naira. In terms of sectoral performances, all the major sectors from the banking index to the industrial goods index returned positive data for this week. Over to the unlisted securities market, which is the NASD OTC, where the USI, the unlisted securities index, got close to the 700 psychological line at 600.99, but it was down in the first week of the year by 0.64%, with a market capitalization of 406.71 billion naira. And that same market, NASD OTC, this week was able to attract a new security. The securities of Mass Telecom Innovation PLC, also known as MTI, have been admitted to trade on NASD OTC market by way of security admission. MTI is an ICT company licensed to provide a broad spectrum of world-class telecommunications products and services. A circular from the NASD OTC says that the dematerialization of MTI shares is ongoing at the CSCS, that's the Central Securities Clearing System. A bit of the fixed income markets, where that side of the markets, the year started on a downbeat note, but eventually moved upwards midweek. Treasury bills turned bullish this week on Wednesday, but that was also supported by the lower stop rates that we saw at the primary T-bills market auction this week. For the federal government bonds, in a similar pattern, the bonds market started the week mixed, but buying interest strengthened as the week progressed. Demands are expected to remain healthy in the coming weeks as investors keep eyes fixed on declining rates. If you take a look at what we have in terms of numbers from the FMDQ OTC, which is the secondary market, number of deals for bonds came in at 151, while the number of deals for treasury bills came in at 497 and valued at 129.54 billion naira. So the all-share index of the Nigerian Stock Exchange did so well last year, closing at 38,243.19 points, and that represented an appreciation of 42.30%, which culminated in the markets being the best or second best performing markets in the world for 2017. Why and how did all of this happen in 2017, as it also affected the rates that we saw dropping on the debt market side? We'll be joined now by Jimmy Ogbobine, who is the manager and head of research at Agusto and Company, to give us the analysis. Thank you very much for coming on board. So good to have you around, and of course you've got for us a historical performance of the capital market in 5 years. What are the issues within this 5 years, which is 2013 to 2017, as it were?
In the last 5 years, like you asked, the issues. First, there's been politics. So within this 5-year span, we faced one of our most important elections in our history. And it was so important that in the first time in our history, the sitting government, the sitting party, lost. So what happened as a result of that election is that it brought a lot of uncertainty in the run-up to the elections. And then after the elections, expectations were high on macroeconomic reforms, which eventually didn't happen. So what we now saw was that investors punished the Nigerian markets. They punished the Nigerian market significantly for dashing expectations on reforms. And then last year, we finally reformed one key issue. The theme of the Nigerian economy in the last 2 years has been exchange rates. So the central bank introduced a new market and allowed market forces operate to a significantly large extent within that market, the NAFEX market.
Yeah.
And what that simply did was that it was able to spoil investor sentiments once again, that there's free entry and free exits in this market, especially from the foreign portfolio investors. Yeah. And what did that do? We've seen it happen in Russia. We've seen it happen in Egypt. So it was simply Nigeria's turn last year. With the reforms in the exchange market, foreign investors were once again able to come into the market. And what we eventually saw was a rally. So market capital increased by about 30%, over 30%, and the index increased by over 40%, about 42.3%. So going forward, the same thing that attracted investors, which was exchange rates, everyone's eyes will be on that same issue. Because going forward, the outlook for the market will also be dependent on exchange rate issues.
Let me just cut in there. You talked about the election, which was a major part of what shaped the last 5 years in the Nigerian capital markets. Here we are, 2018, which is another pre-election year. Do you think we've learned some lessons, or what are the lessons that you think we should be learning now?
First, I'm not sure we've learned lessons, and no one in the room has, either the government or investors. First, foreign investors have very short memories, and they're usually gripped by amnesia. Yeah. But at the same time, they're also very forgiving people. So you break their hearts, and then you come up with a new story, and they believe you again. So we're heading into, first, 2019 isn't the election year. I think 2018 will actually be the election season, because the first working week of the year, for instance, the major issues have been the 2019 election. So we've had two major pronouncements from two very senior personnel in this government. One major announcement from a senior personnel, a minister, talking about setting up a new group, and then another major speculation on another senior minister who is going to be leading the campaign. So sadly, what has happened is that the political rhetorics have started a bit too early. Because what that means is that with the political rhetoric starting a bit too early, foreign investors and other investors now begin to take their eyes off the markets and then begin to look at the politics. And the politics in Nigeria, and permit me to say sub-Saharan Africa, it's one that would never lead to positive rhetorics. Look at the Kenyan story, for instance.
Okay, Jimmy, I'm really sorry. I'll have to cut in again. Okay. But after the break, we will continue this discussion and be able to project deeper into 2018. We'll be back in a minute.
Okay.